Ford, GM, and Chrysler are mounting a second attempt for $25 billion in federal loans. And this time, they're responding to the request by congressional leaders to outline how the funding will help them to survive long term. This follows a less than successful trip to Capitol Hill last month that will probably be remembered for the trips taken to Washington by the automakers' CEOs on private jets. Among the plans expected to be outlined by the automakers are reduction in executive compensation, a restructuring of their debt, and the seeking of concessions from their workers. The automakers have been suffering because of the worst sales they've seen in decades, low consumer confidence, and lack of available credit. Ford, GM, and Chrysler combined burned through about $18 billion in cash during the last quarter, and GM and Chrysler have said that they could run out of money in a matter of weeks. Each of the Detroit-based automakers are submitting their turnaround plans ahead of hearings on Capitol Hill later this week. GM is expected to discuss efforts to get rid of some of its brands, preferring to sell them as opposed to shutting them down. And some lawmakers have asked the heads of these companies to take big pay cuts in return for the bridge loans. Chrysler chief Bob Nardelli has said he'd be willing to work for $1 a year. Ford's Alan Mulally says he'll do the same, and GM's Rick Wagoner is expected to make a similar offer. Among the big three, Ford is in the best shape financially. CEO Alan Mulally is saying the company will accept the federal funding only if the market continues to worsen. The situation is much more pressing for Chrysler and GM, said to be running close to the minimum amount required to run the companies. That means they could run into trouble paying their bills by the end of the year. Mark Hamrick, The Associated Press, Washington.